Hey guys, we're going to get right to it, man. That's a little Joe Walsh for all you guys that like the old school. Guy's been around forever, man. What a classic song. Life's been good to me. I don't know who asked the question if we could explain a stock, but this isn't stock trading. This is currency trading, although similar, completely different instruments. Stock is a part of a company, and if you buy stock in, say, I don't know, you buy stock in Facebook or you buy stock in, Microsoft, you are becoming an owner of the stock. They issue stock whenever they go public. They have stock in reserve and that they can issue more. And when they issue it, you become an owner of that stock. You pay a multiple. Usually, you pay a multiple of earnings, or you pay a multiple. How can you make money off of it? You can make money off of stock or off of this, whichever you want to talk about. I mean, we're going to talk about currency trading. You make money off of stock is if you buy it and it goes up and you sell it, you make money. If you short it, which means you sell something you don't own, and it goes down and you cover the short in a profitable manner, then you make money. Same thing with currencies. Now, the biggest thing between the currencies and stock trading, one, currencies really don't have to worry about people manipulating the stock as far as insiders, CEOs, CFOs, the accounting, and there's been horror stories like that. You also don't have to really worry about earnings when it comes to currencies. You don't worry about one particular, you're not buying one particular company. Like when you buy a stock in Microsoft, as an example, you're buying you're buying into their business, what they do, whether they do it on a profitable way or not. If they grow their sales, they grow their earnings, or they don't, can affect your ownership of the company. When it comes to currencies, the other thing with stocks is they trade from 9:30 in the morning on the Eastern Standard Time, and they close at 4 p.m. Monday through Friday. Currencies open Sunday evening at 5 p.m. Eastern Standard Time, and they trade 24 hours a day until Friday at 5 p.m. Eastern Standard Time. A currency is currency, money. A dollar, a U.S. dollar, a euro, Chinese yen, a Japanese yen, or Australian loonie, Canadian loonie, and Australian dollar. Those are all currencies. So when you trade currencies, you're trading currency pairs. The first one we're looking at here is the Australian dollar to the U.S. dollar. If you go long Aussie to U.S. dollar, you're betting that the Australian dollar is going to appreciate against the U.S. dollar. If you short Aussie dollar, so Australian dollar to U.S. dollar, you're betting that the Aussie is going to depreciate against the U.S. dollar. So we're going to go over a couple of setups that you guys can use tonight and tomorrow. One thing, just want to say, tomorrow morning, non-farm payrolls, 8:30 a.m. Eastern Standard Time. It's coming out one day early because of the holiday here on July 4th. It's being observed. Friday, July 3rd is the holiday. That is the single biggest economic number of every month. It comes out the first Friday of every month. It's the non-farm payroll. It's giving you. It could be fun tomorrow. We've decided we're taking a small vacation, taking today off, tomorrow off, and then Thursday's the holiday. Excuse me, Friday's the holiday. So we had decided to take it off a while ago. But we thought we'd just do a quick video tonight and kind of give you some setups that you could use tonight, tomorrow. Just be careful with that non-farm payroll though, because non-farm payrolls could be it could cause a lot of volatility if they surprise, and if they surprise big one way or the other. If you're in a position heading into it, depending on your size, obviously you could get hurt or you can make a killing. Well, we prefer to be out of positions heading into the non-farm payroll unless we have a small position. So we have no positions heading into it. We do have a couple of correlated trades, which we discussed in the last two videos yesterday and the day before, which is, by the way, is up on YouTube. So you can go to our website, uniqueforex.com. There's a link to the YouTube channel, and you can see our Periscope YouTube, our Periscope video that we did. We posted it on YouTube, and this one will go on there as well after we're done. So here's a setup I wanted to show you guys: Australian dollar, US dollar. This is a 4-hour time frame. Okay, 4-hour time frame of Aussie US dollar, and let me just go and switch it real quick. I want to show you the daily. The daily Aussie US dollar, okay, is in a long-term downtrend. Okay, this is a little under a year's worth of data. Let's go back to that 4-hour. Okay, I like to trade off the 4-hour a lot. What you can see here is it's forming a really nice wedge pattern, right? Which eventually is going to break one way or the other. So you have these lows, you got higher lows coming in, and you got lower highs coming in. We're really not going to look to trade the breakout. As you can see here, this was a break which failed. It broke down and then quickly reversed back up. Let me zoom in on that a little bit more. What we're going to be looking to do is we would recommend taking this thing short. If this happens to hold this, you could trade the breakdown of this. Don't get me wrong, without a doubt. So, you know, if you want to give that a chance, let it break by say 15 or 20 pips below that number, which is, let's call it 0.76235. If you short 15 to 20 pips, you're going to be shorting awfully close to the figure of 0.76000. Psychologically, that's a big number, and that's exactly what happened here. It broke through, and that's a psychological number. It traded as low as 75.90, and then completely reversed in your face if you were shorted. But what you could do is look to see if this thing holds, bounce up, and from past price action, I'd look for it to bounce up somewhere near this green line, which is the 34 exponential moving average. So upwards around 76.89, 0.7689. Could look to go short in that area. If it was to take out the upper trend line in your short, you got to cover. I wouldn't suggest going long there, just because the overall trend is to the downside. We like trading overall trends. Okay, if it takes out the upper trend line by about 20 pips or so, I would cover. In that instance, you're going to be risking in the neighborhood of 50 to 60 pips. So not bad at all. Not bad at all. We'll show you what our algorithm is calling for on Aussie US dollar at this time. It's going to readjust every 4 hours, so it's going to readjust actually in about 20 minutes. It's looking for it. It's looking for a move down. Nothing major though, you can see here, and it's only a 60% chance of a move down. So I'm not crazy about that trade as far as the algorithm goes. As far as technical, just pure technical analysis, it's somewhat interesting. The other thing I'm not too crazy about is that it doesn't consistently hold the moving averages. So that's one thing you can kind of shy away from with it. We have pound to Canadian dollar, which we're going to look at. Let me just zoom out. Okay. This is extremely intriguing, this chart. Okay. Well, let's first go to the daily. So let me show you the daily on this. Percentages for the algo, anything over 70%. Personally, I prefer anything higher than 80%. Is what we what we use when we manage our fund. Pound Canadian dollar, this is just shy of a year. You'll see here it's in a long-term uptrend, right? No denying that. Period of consolidation, I guess you could say, for a few months, and then a breakout higher. So let's do this. Let's go back to that 4 hour. All right, we got a couple of trends here. We got a lower trend line, which a lower trend, which is connecting here, right? These two lines, and then another trend line here that's sliding up higher. That's the trend line that we're interested in. Definitely moving in the right direction here. And you can see from past price action, it really does hold a lot of the moving average lines, which is really nice. It holds the blue and the pink. The blue is the 8 and the pink, or magenta is the actual color, is 21. It held it, this whole move up here, it held it really nicely, and then it consolidated, and here we go, another break higher. And you can kind of see similar price action here. From the low that we drew, right? Held, had a little consolidation, tries to break, but failed. It was a false breakout right here. Came back down, and your trigger would be just to completely get out because it's taken out the moving averages. But now we have another solid move up with a consolidation period, and it looks like it really broke out really strong here. Really, really nice. So I really like this setup. We actually have an alert to go long this thing if it pulls back down to the 21 period trend line, which is that magenta line, the color, in the vicinity of 1.9540. Okay, really nice action on this chart. If we do get long there, our out's going to be anywhere if it takes out these lows. Okay, so you're looking at 95.40 if it takes out 93.10. So, you know, you're looking at a little over 200 pips on the downside. But the potential on this could be pretty big. It looks like it's going to continue to move higher. Let's just look at a daily on it real quick again. There's no resistance here on this thing. If I look weekly. Weekly, it looks like next resistance going to be upwards over 2.000. So you're looking at you got a potential move here of 400, 500, 600 pips, and you risk 2. So that's not bad. Let's look at the algorithm on it at this time. Like I said, it readjusts every 4 hours. Right now, it's looking for a pullback, which would pull it back right to the magenta line, or even the longer time period, the 34 period moving average, and an 88% chance that it's going to pull in, but this thing's going to recalculate, so it could pull in, consolidate, and you may get a recalculation of this right now, 88% chance, and it could show it go higher. I mean, you can see the move here, how it was nailing this thing on the way up. So definitely something to look into for sure with pound Canadian dollar. Let's go here. We got a couple more to do. New Zealand dollar, Japanese yen. All right. So let me show you daily. New Zealand dollar, Japanese yen. Oops, sorry about that. New Zealand dollar, Japanese yen on daily. It's kind of choppy. I mean, it was kind of moving higher or consolidated, tried to break higher. But now over the last, 2 months, 2.5 months, coming on 3 months now, it's obviously in a downtrend. Going back to the 4 hour, it is definitely in a downtrend. You see the consolidation and then the breakdown. Okay, so definitely in a downtrend there. We drew a couple of trend lines. We have the one up high, and then the one more recent, which is over the last since the beginning of June thereabouts. We have a move down. Okay, and on this move down, let's just zoom in a little bit. On this move down, it's been holding pretty much the magenta line for the most part, and also the short-term trend line. So we have a potential short around the magenta line, which is 83.58, 83.60 area, with a stop of, call it 84.50, 84.60. You could risk about 100 pips on it. and then a potential move of 100 to 200 pips. So 1-to-1, 2-to-1 risk reward. Let's look at New Zealand dollar, Japanese yen on the algorithm. Okay, algorithm at this time is showing 89% chance that this thing is going to consolidate, maybe move up to the magenta line area before falling down. So really like that as well. That's New Zealand dollar, Japanese yen. New Zealand dollar, US dollar is another one we're going to look at. Really similar price action on this. Obviously, it's New Zealand dollar, US dollar, New Zealand dollar, Japanese yen are very similar. This is the yearly on New Zealand dollar, US dollar. You could see trying to move higher, consolidated, and then finally broke down. And we'll go back to the 4-hour. And on the 4-hour, since the beginning of May, this thing's been in a complete downtrend. So again, we want to trade with the overall trend. So we're going to be looking to go short this thing, New Zealand dollar, US dollar. And you can see here on this whole trend line down, right? I mean, it's been holding the magenta line many times and been holding the green line for the most part. A couple of times where it broke higher, but you probably would not have been stopped out. So again, we're looking to go short around this magenta line. Let's call it 0.6796 area, up near the figure of 0.68. With this, we're going to be risking about 100 pips or so as well. Yeah, it held the trend line tight. It held the trend line tight, and it held the moving averages tight. So we really like it. Let's check out the algorithm on it. New Zealand dollar, US dollar. Similar type price action as that New Zealand dollar, Japanese yen. It's not showing a rebound, a bounce back up until this is 4 hours. So, oh man, I don't know. That's probably a day or two. But it is showing a move down, possibly spike up, and then another fall. 94% chance that's going to come in. So a pretty good bet. I wouldn't trade both. If you're looking at them, I would pick one because they're correlated. They're somewhat correlated. They're going to kind of move together. We started off with Aussie US dollar, pound US dollar. Okay, let me bring up the daily. Okay, pound US dollar. It's interesting. I don't think it's quite as interesting as pound Canadian dollar, but it's interesting. It had a move. It was moving up higher, and then finally rolled over. And when it rolled over, it came in really nice. But it looks like it has bottomed. Okay, it looks like it's put in. I don't know if you could quite call this a double bottom here because it did break, but it's close to a double bottom and has since bounced up. So we have the longer term trend. Okay, that's on the daily. The longer term trend, it's kind of hard to say. Do you say it's still in a downtrend? You could make that argument. Could you say it's bottomed out and starting an upper trend? You could make that argument. So that's a little wishy-washy, right? But if we go to the 4-hour, on the 4-hour, it's clearly in an uptrend on the 4-hour. So we prefer to play this thing from the long side. We're looking for it. We're looking for it to hold this trend line. Now we're not going to be buyers quite yet. This is how we're going to play this. Pound US dollar. We want it to come down and we want it to hold this trend line. You know, within reason. Hold the trend line. Maybe hold it for a day or two, right? Maybe even 3 days. Hold it. Start to reverse up, but we're not going to go long until after the reverse up clears all the moving averages. Okay, just like you've seen here and here. Okay, this held. You could have at that time could have been making a brand new trend, a brand new line to connect the bottoms here, but it held, reversed, and it took out the moving averages and eventually moved higher. This was beautiful action right here. Let's see if I can zoom in on that. Right, this is beautiful action right here. Held this for a 4-hour time frame. 1, 2, 3, 4, 5, 6. six, so basically a day. It held it, and then once it cleared the moving averages, she was off to the races and she ran. We expect to see similar price action out of the pound US dollar going forward. So we're going to be patient with that. Let's check the algorithm on it. Okay, the algorithm is at this time showing that it's expecting this thing to come in, 92% chance. 92% chance that it's going to come in. But now, this thing could come in to that trend line we showed you, which is, let's call it 1.5480, okay? So this thing could come into 1.5480, which is right in this area, which the algorithm is showing it coming down here and then coming down here as well. But at that time, if it comes down and it holds, right, and it bounces around for a day or so, and it holds, and that algorithm could completely change, and it could recognize what we're seeing. And if it does, that's total confirmation that thing's going to move higher. But again, we're not going to take it until it clears the moving averages on the upside. I think we got one more to go over. Yeah. US dollar, Canadian dollar. Okay. Let's look at the daily first. US dollar, Canadian dollar on the daily, clearly in an uptrend. Right? Clearly in an uptrend. Get that out of there. Okay. 4 hour, not quite as clear on a 4 hour. Could maybe make an argument it's in a downtrend. I don't quite know if you could really say that. Down to consolidating. But what we like here is that this thing broke the trend line. We had two trend lines drawn. We had a wedge forming, right? These tops, this top line here, this bottom line here, forming a really nice wedge with another intra wedge or intra support line moving up, right? Really like the action we're seeing here. Totally broke above that trend line. Okay, sort of like the opposite of that Aussie US dollar chart we showed you originally. That Aussie US dollar was clearly in a downtrend. We're coming so close to this support line. You could try to play it on a breakout, or you could look for it to bounce and then try to short for another fall down. More like a sort of like a somewhat of a scalp trade. But US dollar, Canadian dollar is pretty much opposite that. Totally broke out to the upside. What we want to see is a pullback to the magenta line, okay, which is that 21 period moving average. And you can see on this move up here how it's pulled back to it. Twice it pulled back with really nice bounces. Several times it pulled back to the shorter time period and bounced. Okay, so we're looking for a pullback to that magenta, and right now that magenta line is pretty much it's moving up very close to this upper trend line. Okay, would love to see this play out for you guys tonight. Again, we're not trading because we're off for the holiday, but would love to see this thing pull back somewhere close to this magenta line, which is moving right with this trend line here of the breakout. So when you see breakouts of wedges, a lot of times they pull back to that, which was for this one a resistance level, and if it holds, they bounce, and they can bounce them really hard. So if this magenta line hangs around this upper line, or just kind of comes up above it and it pulls back, we're going to be buyers of that for sure. Let's look at US dollar, Canadian dollar as far as the algorithm goes. Not much to say here. I mean, it's clear, right? It's a clear breakout. The algorithm's saying 75% chance that this thing pulls in a little bit and then starts to run higher. Again, it's going to recalculate actually in 3 minutes from now. It's going to recalculate again in 4 hours from now at 12 p.m. Eastern Standard, or 12 a.m. Eastern Standard Time. So, but you always have to watch it. It gives you that confirmation of what you're seeing. So that's it. We're going to wrap it up. Go to uniqueforex.com. Check it out. really, that's it. What else to say? Be careful with non-farm payrolls tomorrow morning. This will be it for the week as far as our videos. And we'll start them again either Sunday night or Monday morning, probably Monday morning. We like to do them in the morning, but we thought we'd give you one since we're off today and tomorrow. We didn't do one this morning. We figured we'd give you one tonight and move forward from there. So good luck with it, obviously, if you're trading, man. Good luck. And shoot us any questions. You could drop us an email, trade@uniqueforex.com, with any questions that you have on this stuff. Send us a tweet. We're on Twitter, obviously here, whatever. So that's it, all right? So if you're, no euro, US dollar, we're not touching it, dude. We're not touching anything really euro. The only thing we have with euro is a correlation trade between euro pound and euro yen. Yes, exactly. Too risky because of all the uncertainty of what's going on with Greece. At least until Sunday, July 6th, when the referendum takes place. We'll hopefully know a little bit more. I mean, officially they've defaulted, but they're still not kicked out of the euro because they're going to have this referendum. Yesterday, the Prime Minister from Greece, he was talking tough, saying he wants his people to vote no to the referendum, basically to the terms the creditors have provided. He's saying to vote no because the ECB can't kick Greece out of the euro, that they can't afford it. And when he made the announcements, we tweeted out, we told our traders that's absolutely BS. The ECB and the euro can definitely afford to not have Greece in it. They're just talking hardball, and it really backfired on him. Well, it hasn't backfired as far as the vote goes, but I think it backfired as far as he thought he was going to get the IMF to extend at least until the 6th. And when the IMF did not extend and they let that deadline come and go, he started shaking his boots. I bet you that guy didn't sleep a wink last night. And this morning he came out and he basically agreed to, it's probably about 80% to maybe even 90% of the terms of the creditors. He submitted a proposal agreeing to, like I said, about 90% of the proposals that the creditors want. But he did make some minor changes, and you know what they did? They kept their mouths shut. The IMF hasn't even really responded yet. The response the IMF gave was, we're going to wait for the referendum. So now this guy is going to have a miserable, whatever, 4 or 5 days until that vote comes, and we see what happens. Personally, if I was the people of Greece, I'd vote yes, just to stay in the euro. I'd let things settle down. If you have any money in the bank, and I'd go and I'd take all my damn money in the bank, I'd convert it all to euro, or I'd convert it all to US dollar. Hell, I'd convert it to the Chinese yuan, and I'd put it in a safe somewhere in my house, buried away, because not only are there capital controls right now, the people can't take out more than 60 euros at a time out of an ATM machine. The banks are closed, and which by the way is equal to about 66 US dollars. Banks are closed, and I heard rumblings of the government coming in and doing a partial confiscation, taking some of the depositors' monies. So if Greece leaves and Euros raises rates in September, then Goldman may be right. You know what? You could go to our blog on Tumblr, and we actually posted something a week or so ago, and it was a little bit of a conspiracy. And we're not huge on conspiracy theories. We do like to read, but we like to take all of it in and kind of see what people are thinking when it comes to conspiracy theories. But we did write one, and we were saying that. Basically what you just said. We were saying, number one, we know Goldman Sachs is one of the largest and most influential investment firms out there. A bunch of Goldman Sachs ex-employees sit at central banks, sit on the Fed, sit in very influential national or international levels. 3, we know Goldman Sachs really wanted the United States government to make an example out of Lehman Brothers during the financial crisis. And what happened? The U.S. government chose Lehman Brothers to make an example out of, and really spurred the financial crisis on. I mean, yeah, Bear Stearns was got sort of like the ball rolling, but Bear Stearns were nowhere as nearly highly leveraged as Lehman. Matter of fact, Bear Stearns got gobbled up by, who was it, Chase, I think, where Lehman Brothers was leveraged to the gills like 48 times, I think it was. So much so that no one wanted to buy him. No one wanted to come and buy Lehman Brothers. Not Bank of America. They bought Merrill Lynch. Goldman Sachs certainly didn't want to buy them. Chase, they didn't want to buy them. They had just bought Bear Stearns. They could have bought them. They could have afforded to buy them. They didn't want them. No one wanted Lehman Brothers. It was like toxic. And Goldman Sachs pushed the government to make an example out of them. Well, now you got Goldman Sachs. Their number one call for 2015, which they made that call back in, I guess, December of 2014, was to short the euro, that the euro was going to go to parity, and then that the euro would go below parity down to whatever it is, 85, 86 cents on the dollar. You know, so we'll see if the ECB kicks Greece out of the euro, it's going to force the ECB to do more quantitative easing. It's going to force, it'll probably force Janet Yellen's hand at the Fed to not raise rates so soon, or at least to put it off. That's the one minor bright spot for the euro to US dollar. But if they do kick euro out, or I should say Greece out of the euro, it's going to force the ECB to increase their QE. They're doing QE now. They increase it higher, which is going to devalue the euro. So, it's pretty basic stuff. I'll tell you one thing. This whole QE, this whole quantitative easing is a financial engineering experiment never been done before in mankind. I believe it should never be done again. I don't believe that it creates jobs at all. What it did was stabilize the world economies, stabilize the United States economy, it's trying to stabilize the Japanese economy. It's been stabilizing the European economy. Now China's talking about doing QE. It's going to stabilize their economy, but it does not create jobs. Why does it create jobs? Because there's no incentive. Having interest rates at zero bound are no incentives for big money, investment firms, banks, whatnot, mutual funds, to invest in zero bound interest rate products. They will invest some of their capital, of course, but they're not going to invest a lot to impact things, right? So therefore, you have less demand for local bond municipalities, as an example, government bond. The Fed's in there buying a bunch of the treasuries as it is. They're buying local municipal bonds as well. If you take them out of the ball game, interest rates will rise. Okay, but that's not what they want to do. So now you have the county of Rockland County, New York, wants to issue some bonds to do this, that, and the other thing. Whether it's a school or some roads, whatever, bridges, whatever they're going to do. The demand is not there. There's not enough demand. So therefore, they can't issue the amount of bonds that they want to. So therefore, they're not doing as many projects, and therefore, they're not hiring as many people. Or not just hiring people, but contracting out work to companies that do this. And it becomes a whole chain reaction. So now the guy that owns a paving company that would be paving a brand new bridge or repair work on the bridge, he doesn't hire as many people. So he's not hiring as many people. So therefore, maybe this guy that owns the company, since he's not making as much money, he's not hiring as many people to do landscaping. He's not hiring the lady to come in and clean the house once a week. It's a vicious cycle that goes on. That's just one problem with what's going on. The only thing that QE is helping, other than making the rich wealthier, it's making the rich wealthier because stock markets keeps rising, right? Although they're starting to liquidate a lot of their holdings because their cash holdings have never been this high. For the average billionaire has never held this much cash in recorded history. I don't know how long they've been recording it, 50 years, 100 years, whatever, but they haven't held this much cash. But what the QE is helping, obviously, is the investment firms and the banks. They're doing such financial engineering on their part. All they're taking is electronic risk. They're not taking real risk, is really what I'm trying to say. To take real risk is when you float bonds, you do projects, you hire people, you make sure they're doing it right and whatnot. So I don't know, dude. You know what real estate, the one thing, I'll tell you what's going on in real estate. And so many people that are in the real estate game, they try to convince you the market's hot and this and that bullshit, whatever. What's going on in real estate is hedge funds. Blackstone is one of them. They have, since the financial crisis until about 4 or 5 months ago, Blackstone itself, one fund, has invested $8 billion, that's what a B, billion dollars in real estate. They're buying homes from $200,000 to $450,000. They're buying them out mostly in cash. I don't know if you've seen the last housing data. 68% of existing home sales was done in cash. They've been buying homes in cash, sprucing them up, whatever, renting them out. Then they create products that they bundle a bunch of them together, and they sell it as whatever you want to call it, some type of product, like a CMO type product. And the rent that comes in pays it, all right? Blackstone has stopped over the last 4 or 5 months. They've stopped buying. They haven't started to sell, but they stopped buying. Now, that's just one fund. There's several others. There's a $5 billion fund that's put $5 billion in. There's one of them that I read was putting in about $1 billion. One was $900 million. Blackstone was the largest, and they've stopped buying. And you've seen real estate prices have stopped rising, and they've plateaued, and they're starting to pull down. If these funds decide, all right, well, we've run our course, we're going to start to liquidate and give investors back money off the principal that we make, you're going to see a real estate market go down. The real estate has not been strong or stabilized because the banks are lending. The banks have no incentive to lend. They have no incentive to lend me or you a mortgage at 4.5%. Some of them are even, you know, if you get the what do you call the arms, you can get them for whatever 3%. There's no incentive there. All the banks are doing is taking electronic risk with their capital, and I don't blame them. I would too. I do it all day long. They're not taking any real risk. They're not taking risk in real estate. They're not taking risk in projects and jobs and whatnot. There's absolutely no incentive. The Fed needs to normalize interest rates ASAP. Obviously, you're not going to do it all in one shot, but they need to normalize them. And they're looking for an excuse to normalizing. They're trying to tell us, and the government is obviously in on it, they're trying to tell us that unemployment rate is down to whatever, 5.5, 5.6%, almost close to full unemployment, and that the economy is moving forward. They are so full of crap, it's almost funny. It's almost comical. Real unemployment, we all know, is upwards of 19 to 23%. You have the labor participation rate is the lowest level it's been since the mid-1970s under Carter, for God's sakes. There's so many people that I know are out of work, can't find a job. How they manipulate the number down to unemployment down there is very simple. They say the people that once their unemployment benefits expire and they're no longer eligible to receive unemployment benefits, they say those people left the workforce, that they're not looking for a job. You mean to tell me there must have been a lot of rich people out there that had rich uncles, or rich parents died, or a rich uncle died and left them a money, or a lot of these people hit the lottery? Because if you're 45, you're 40 years old, 35, 50, whatever, and you lost your job, and your unemployment over the last year and a half, whatever it was, 2 years, you kept getting extended, has run out, what do you do now? You got nothing. You got no money coming in. If you don't have that money saved, you can only pay your bills for so long until you get into dire straits. But according to the government statistics, that person segued into retirement. They are so full of, you know what, that it's not even funny. I mean, it's a shame what's going on, and I would love to hear a politician stand up and speak it. Say what a majority of us know. What on earth is going on, the problem, and let's move forward and clear it up. Let's let the Fed start to normalize interest rates and move forward. You normalize interest rates on that 10-year bond, and you get it up there, 4.5%, 4%, 5%, in that vicinity, normal type of interest rates, you'll see this economy start to move. It might take a little bit of a problem getting there, but it's gonna absolutely move. Yeah, right. I agree. The stuffed envelopes do keep me from telling the truth. All right, man. That's it. We're gonna go. I'm gonna enjoy the rest of my couple of days off, and we'll do another video Monday morning to give some setups. Hopefully, some of these trades work out for you. Oh, that pound US dollar. If you watch yesterday's video, dude. Yeah, happy 4th to you too. If you watch yesterday's video, which is on YouTube, of pound US dollar, the algorithm at that time, let me see, pound US dollar. Yep, the algorithm at that time was pointing down. It was given 91% chance, I believe, if my memory serves me right, that it was going to come in. It's still showing 92%. And we were saying, let it break these bottoms here. You zoom in a little bit. We were saying, even though we had a 91% chance, we were saying, let it break these bottoms by 10, 15, 20 pips. That bottom was about 1.5660. So 1.5650 to 1.5640 to take it short there. Go check out the video. It's on YouTube. You'll see it because I think it expired off the Periscope already. But man, what a beautiful call, right? Came all the way down to 1.5583. You know, that's 50, 60, 70 pips move without taking much risk at all. So definitely one to look at, or at least go review the video that we have on YouTube. Just go to uniqueforex.com and there's a link up top to our YouTube channel. All right, man. Everybody have a great 4th. Yeah, totally a nice move. Everybody have a great 4th, and like I said, we'll see you Monday morning.